Good afternoon, and welcome to our discussion of the study guide for Accounting 211's final exam. I want to start the discussion by reminding you of some things that we've been talking about during the course of the semester. This test is worth 2,750 points. And this test is the final, so that's a slight misprint. The midterm exam is also worth 2,750 points. Connect homework is worth 1,400 points. Blogs, 1,100 points. And the Connect case study worth 2,000. When you add all of these up, they come to 10,000 points. The nature of this test, as was the case with the midterm, is that you have 2 hours to complete the test. There are 20 multiple choice questions. Those are worth 70 points each. There are 4 problems, and those are worth 340 points each. The test covers Chapter 6 through 12. So I've taken the approach, as I did with the midterm study guide, of going over what each question is asking or what it's based on. So from Chapter 6, there are a total of 3 questions, and one of them, you've had a duplicate number 2 on here. So the first question is, what's meant by the term book balance on the bank reconciliation? That's discussed on page 273, but I'll give you a hint, or really I'll tell you the answer. Book balance means general ledger balance. So what we think of as the company's books are the general journal and general ledger, and in this case the general ledger balance for cash is what we're talking about. What does the accountant do with outstanding checks on the bank reconciliation? So here I refer you to page 274. Take a look at the bank reconciliation that appears, the discussion in the chapter, and think about what happens with outstanding checks. These are checks, remember, that the business has written and the bank hasn't yet shown as cashed. Finally, what's here numbered as question 2, but it's really question 3. How does one show unrecorded bank expense on a bank reconciliation? So this means you have bank expense that the bank charged, and the business doesn't know that the bank charged it yet. When they get the statement, they figure that out. Now, just because I tell you these are numbered 1 through 3 on the study guide, don't look for these to be in this order on the final exam. There's also a problem from Chapter 6, one of the 4 problems. And the problem is, prepare a simple bank reconciliation like the one on page 275. So here, you'll be given some facts, but you'll just be given blank space to show the bank statement. So perfect format's not important, doesn't quite matter if things don't line up, but you are giving me the format of the bank reconciliation. You're not going to have little blanks to fill in. If you review the video that I put back in Learning Unit 6 called Cash and Internal Controls, I think you'll find this will help with this question. Chapter 7. There are 2 multiple choice questions and a problem from this chapter. This chapter, remember, dealt with accounts receivable and bad debts. So first, we have the calculate the bad debt expense using the percentage of sales method of estimating bad debts. So remember, there are 3 ways to estimate bad debts. One of them is percentage of sales. It's page 309. Go back and have a look. Question 2 from Chapter 7. Direct write-off method is not an allowance method of valuing accounts receivable, with the key here on the word allowance. So this question is going to take the form of a multiple choice question that says, which is not an allowance method? Relate that to question number 1 above. Question number 1 above, I told you there were 3 allowance methods, and we were interested in percentage of sales. Direct write-off is not an allowance method because it's not an estimate. It's actually waiting until the debt goes bad to write it off. The problem in this chapter is to estimate the bad debts using the aging of receivables method, and that's shown on page 310. So here, you're not going to be asked to do a journal entry, which would add a level of complexity. Instead, all you're going to be asked is, here's some basic facts about the balances in accounts receivable that are on time, 1 to 30 days late, 31 to 60 days late, and so on. And historically, here's the percentage that the company finds of those accounts that need to be written off. From here, you'll just estimate bad debts and provide a number. As with the problem in Chapter 6, you need to answer all 4 of these to be eligible for any curve. And also, you need to get something down there. So take a shot at it, even if it's not a perfect answer. Chapter 8. There's one multiple choice question. Calculate an asset's book value at the end of the year using the double declining balance method. So here you're calculating depreciation, but after you calculate the depreciation, what you're doing is finding the book value at the end of year 1. Remember that book value is cost minus accumulated depreciation. Then there's one problem, and the problem is prepare 3 adjusting journal entries. Just looking at that again, I'm feeling like the video is a little bit of a cue, and the outline is a bit of a cue, but this problem actually does not appear. This is a mistake that I didn't take off. So there's really only one problem from Chapter 8, only one question from Chapter 8, and it's a multiple choice question. Again, you will not have a problem from Chapter 8. So nothing about the 3 adjusting journal entries. Chapter 9, several questions. First, what type of account is sales tax payable? Look at page 380. Here we're just talking about probably whether it's current or non-current, and is it an asset, liability, or equity account. And you'll be able to answer it's a current liability. There are 2 questions, you might call them question 2 and question 3, that has you either define current liability, define long-term liability, or look at some liabilities and their ages and try to decide if they're current or long-term. So you could, for example, be given 2-3 liabilities, and you're asked to decide what portion of these is current and what portion is long-term. The 4th question would be record a journal entry for one employee's pay and record the payroll deductions. You also might have the question, calculate net pay for an employee. And notice here the difference between 3 and 4 is that there's no journal entry required for number 4. And actually this, of course, given that number 2 had 2 questions, there are 5 total multiple choice questions related to Chapter 9. Chapter 10. We have 2 multiple choice questions that deal with the nature of a bond discount. So these types of questions get at economically or idealistically, what are we talking about when we have a bond discount? Then we you're also going to be required to calculate cash interest on a bond. And this is described on page 424. Finally, the 4th question will be much like the 2 I mentioned earlier, except thinking about the nature of a bond discount, instead you're going to be thinking about the nature of a bond premium. Chapter 10 will have one problem, and the problem will deal with bonds payable. Do a journal entry. This notice has 3 steps. all of which will have to be done longhand in this blank space. One will be do a journal entry to record the bond issuance at a discount. One will be calculate a semi-annual cash payment, calculate the discount amortization, and the bond interest expense. And page 426 discusses that. And put the calculations from this last part, part B, into journal entry form. You'll be given relevant facts, but you'll just be given blank space to show your work. Reviewing my video from Learning Unit 8 that was called Liabilities will help. Be aware, though, that that video shows you how to amortize a premium. This time you're going to have to amortize a discount. There's a lot of similarity, but make sure you understand the differences. Next we go to Chapter 11. In Chapter 11, there are only multiple choice questions. So one of the multiple choice questions asks you about par value and what it's based on. And what the book talks about is that par value is arbitrary. But one thing I added in the video is it's arbitrary, all right. So usually businesses think about likely state capital tax applications. So what we mean by state capital tax is it is consistent with federal law for a state to charge a tax on an out-of-state company's equity or capital. However, that's not unlimited. They can only tax par value. So, if a company makes its par value very low, like a penny, then the tax it'll be subject to on the par value is very low. In fact, so low that it's not considered anti-competitive dealing with corporations from different states. The next question has you record and determine the cost of treasury stock. Record here means do a journal entry. And finally, question 3 talks about the definition of a small stock dividend, and that appears on page 474 of your text. Question 4 has you actually do accounting for a small stock dividend, and that also comes from page 474. The final chapter on your final exam is chapter 12, and here you have a multiple choice question and a problem. So the multiple choice question is what section of a cash flow statement is the place to show cash purchased by, what portion of the cash flow statement is where you show cash received when owners purchase stock? Now the answer to this is the financing section, but go back and look at page 512 and determine yourself why that's true. And then the problem, and there was a video about this in the last learning unit, is prepare an indirect statement of cash flows. Notice you'll be given some facts, but just blank space. You won't be given a template for the indirect statement of cash flows. But if you look at all 3 videos that I provided in Learning Unit 9, they'll help you prepare the indirect statement of cash flows correctly. Well, that's the study guide for the final exam. Give me a call if you have any questions, and I wish you luck.